Good morning, guys. Today is June 3rd, Monday. Hope all is well. Markets are doing fairly well, so most of you must be pretty okay. Last week was a little bit of a downer, so seeing this week connect back up again is a very good sign. Okay, one of the companies that showed up on the radar is Airbnb. Most people know the stock fairly well, or know the company fairly well, or have used an Airbnb either as a host or as a guest. I thought we'd take a little bit more of a look at the market itself, where the opportunities lie in the long term, and why building a brand that is as good as Airbnb has so far in this market is a very good opportunity. Okay, so Airbnb, for those of you that don't know, has been maintaining a fairly decent market share overall in the stays segment. Now, long-term stays or short-term vacation stays typically are divided into hotels, which own and have consistently owned about 50% of the market. So, given the number of rooms that are available, that's a little bit surprising given that nearly three times the number of opportunities and rooms are available on the short-term rental market than the hotel segment. But still, hotels have done a very good job of maintaining both business and leisure market share. The second one is packages. Now, these are complete stay included along with travel, and then cruises are a much smaller portion of it. So that's the amazing part. The share that might get taken away, the question becomes where, if vacation rentals had to grow up a little bit higher or much higher, depending on how you look at it, where does the share go away from? Number one, of course, the market increases overall, which means this could go up, and even if it goes up slightly, the overall market going up goes well. Second one is this could come down, which seems unlikely given how steady and consistent that has been over the years, except during COVID timeframe when it kind of made a little bit of a dent, if you will, but then have gone back to normals. So that's the big question. Where does Airbnb find growth from? Does it come from experiences, which is their new segment that they're operating in? Does it come in iconic properties that a lot of people are pushing right now, fairly recent as a phenomenon? That's the million-dollar question for Airbnb. Now, the overall market is fairly large for stays. If you look at it, Airbnb has about $1 trillion and more than $2 trillion nearly in short-term stays. Long-term stays about a $200 billion market, and experience is another 1.4 trillion. The market can be defined as fairly large. But remember, we just talked about short-term stays themselves. Nearly 50% of this market is owned by the hotels. About another 35% is packages. Those are not going away anytime soon. So it's hard to see where Airbnb will actually see that growth coming from unless this market itself grows. But even if this market grows, they have to take share away is the only way they're going to be able to do very well. Roughly about 5 million plus Airbnb hosts worldwide exist. 150 million people who are guests stay on Airbnb, and roughly about 7.7 million listings, active listings on the platforms. Active listing is something that has actually been updated in the last 1 month, according to them. Now, if you look at the short-term stays themselves, Booking, which is VRBO, and a few others that exist as well, including Expedia. Expedia actually has VRBO, are the ones that primarily provide the short-term listing platform management, allowing you to be able to book in somebody's home, apartments, a home, or a very unique property in some cases as well. And the market share is still Airbnb doing about 25%. Now, there are about 100,000 cities worldwide that actually have Airbnb listings, and most of these are in the United States, which has the highest concentration, followed by Asia, followed by Europe. So Europe and Asia are still doing very well. United States, I think, will start to slow down overall given the penetration, but experiences tends to be the big moves. Now, Airbnb has 100 different types of different listings. So you could say, I only want a camping ground. We do that as well, or they're doing domes, they're doing design homes, they're doing homes with only a piano. So a lot of features that you can search, scroll, filter by to be able to get the right kind of home overall. So 150 million people use it. As more hosts list their product, you get different accommodations with better pricing, more guests come in, which demands to more the home. So that's the life cycle of or what a lot of people call in the Amazon parlance, the flywheel effect for Airbnb. It starts with great hosts that are available, and once the host makes the platform available makes their home available on the platform, makes it easier for new guests to find them. Airbnb, for every home or short-term rental that actually is listed, makes roughly about $15, if you will, that they take overall. Um, and that's right, $3 that they take. About 11% has been the constant fees. So if you look at it, 11% has been the take rate for Airbnb, along with a 3 to 5% a credit card fee or a booking fee, if you will, which ends up being roughly about 11%, as I said, overall. If the host says we're going to list the home for about $100, they get $97. $3 goes in the credit card processing fee, and then Airbnb charges another $11 to $12, and then the guest pays $120. So in this case, technically, the guest could have paid $100 and gotten away with not giving the fees, but in a lot of cases, the host says, "I want to pay this much." So it depends on how you want to look at it. Somebody is paying for the fee. Both of them seem to be end up paying for the fee in the end. Now, the average cost of the Airbnb at home or listing, if you will, is about $163 per night. This is comparable to a hotel price right now. So the only advantage that most people claim Airbnb has, the fact that the home, even at $160, may be a bigger home in some cases, or maybe much smaller in some cases. They're fairly comparable in terms of availability, size, etc. And listings wise, you will find that a lot of homes tend to get listed during the summer months and then early in during the ski months. So that's how the listings have been going overall. And typically an Airbnb guest stays about 4 nights per booking. Now, if you look at the number of checkbooks by day of the week, you'll get the most number of listings on the week as opposed to the weekend, which is very surprising and a little bit different than what you might find in a hotel-based listing. And a typical host, if you will, if you are putting your property up for a rental case, you will make about $14,000 on an annual basis, roughly about $1,000 a month. So if you're making $100 per week and you're making $163 on an average and $1,000 per month, you're roughly getting about 6 to 7, maybe a little bit more than 8 days on an average basis that you're renting it out of a total of 30 days. Now, there are lots of people on Airbnb, companies, if you will, that actually have multiple listings together that they put together, and they actually list 3, 4, 5, in some cases even 10 to 20 properties. They would have a much higher listing, but they're operating more like a managed rental as opposed to an individual. Europe tends to have the most listings overall. This was the case as of 2023. Before that, it was USA and America in particular, but Europe has a ton more listings, a lot more expensive in Europe, which is why you get a lot more options for listing in Europe, followed by Asia Pacific, then by North America. Now, this includes not just Airbnb, this includes all of the listings available on VRBO and on Hopper and a few other platforms such as Booking.com. And the most opportunity exists in Latin America overall. The kinds of homes that are available, apartments and homes tend to be the most available overall. This is expected. Apartments tend to be typically a Europe specific thing, and houses more particularly in the United States. So a lot more apartments available now. And that makes it easier, especially because most of the apartment listings tend to be in cities. Number of listings from a month perspective, as I mentioned, tends to be a lot more during the summer months. And then quite a few listings happen even during the ski months. So January starts off very strong, which is surprising if you think actually most people don't take a vacation in January, I thought, but the listings increases dramatically. Now, there are a bunch of challenges that Airbnb is confronting right now. One of the biggest challenges, among the bigger challenges, one of them has been fake listings, an increased number of fake listings, typically done by a whole host of people, including some claims that hotels nearby do it, get the listing, get the payment, and then they cancel it so that you can go into a hotel and book it. Don't know if that is true or not, but I'm pretty sure some of that is happening. Second one is a lot of owners within the area where the listing is complaining of parties, complaining of excessive noise and things of that nature. The hosts themselves are a lot more upset because the number and amount of fees that are being charged in terms of what is expected to be cleaned. The guests themselves are very much of the complaining sort, given right now that a lot of people are asking to do a ton of things before you leave in terms of cleaning. So usually it used to be you can just leave a hotel exactly what it is in the room, whereas in a Airbnb, you're given a huge list of here are the things you need to clean, here's what you need to do before you leave. So that's turning off a lot of hosts and guests, I think, to a large extent, but still the platform has consistently increased the number of both bookings and number of listings itself. In terms of a moving average, what you'll find is most of the hotels are doing fairly well. Airbnb actually is going down in terms of 90-day moving average in terms of visits. Here, this is 2024 January, so it's about 3 months over. Marriott, Hilton, and IHG, all of them are actually doing much better than Airbnb. They seem to be a lower in listings. In terms of happiness, Airbnb is still not as NPS score driven being able to give as much of this is mostly from a guest perspective, not from a host perspective. People that go to Hilton Marriott seem to be a lot more happy, obviously because they are also paying a lot more money, I would imagine, but than an Airbnb. But 60%, that's not a very good NPS. All along, their year-over-year revenue growth has been declining from nearly a 70% down to nearly about a 17%. That's a dramatic slowdown. But again, the size in terms of the actual dollars is growing fairly well. Now, experiences typically spans not only for stay, but also a list of local places that you could go to, local places that you could eat, unique things you can do in a specific location. That's Airbnb experiences. This is more of the packaged opportunity that they are trying to move into. It won't be surprising to me for them to see if they partner with a few travel companies also in the flight and airline space to be able to offer an end-to-end package, if you will, for the customer. Now, you can go into Airbnb both on the app and on your laptop and be able to filter by a lot of different criteria. For the host, it makes it very easy to be able to search for the exact right property, especially useful if you're traveling with a lot of people. Typically, families of 8 people or more who are going with a bunch of other friends, if you will, tend to typically use a lot more of Airbnb than anything else. But capability to filter, look for the right percentage and opportunity for you tends to be usually a very good thing. During COVID, a lot of people started to also go and stay for longer periods of time at other locations. That led to a longer stay opportunity, which was much more useful for Airbnb hosts. And that has turned out to be very well as well. So if you zoom out and look at Airbnb, what are the things that are driving it? Number one, the overall market of vacation homes and vacation rentals and vacation opportunity for stays has remained fairly constant and is growing at a constant 3 to 5% rate. The hotels and package deals have continued to maintain their market share. Airbnb has not gained a lot of market share in the last 9 years, if you will. But even then, they've grown fairly quickly, which means the overall opportunity of travel has grown fairly well. That's the first opportunity. Second one, from a host perspective, there are some challenges, but they seem to be addressing them with a complete fee opportunity, which is tells you exactly what fee you are going to pay all in instead of putting a rate at the front and then charging a bunch of cleaning fees and other fees in the later part of it. The second thing that is useful and that is changing is short-term rentals are becoming more long-term rentals. And then the experiences format, which is a key different opportunity for Airbnb, is coming into play for a lot of hosts. From a guest perspective, fees seem to be increasing. A lot of local regional locations, governments are cracking down on short-term rentals because it drives up rental prices for long-term stays, is the belief. Now, they've done that in New York, they've done that in a few other places. New York especially cracked down fairly strong, which means that if you want to be able to rent your home in New York, you have to stay in it, and you can only have, which is very interesting for someone coming into New York. If you're going to stay with somebody in their house, that's a little bit of a challenge for a lot of people, I would imagine. The second part of that is if you're going into New York, if you want to be able to rent Airbnb, the owner of that Airbnb, the host, has to be able to register with the state of New York and pay a lot of fees associated with what you would expect to be very similar to long-term stays at a hotel or even a short-term stay at a hotel. So that's discouraging a lot more listings coming in Airbnb, jumping prices up. So that's another challenge to worry about from a host perspective. Both hosts and guests seem to be complaining a lot more now because of fees, because of availability of the things that they need to be able to do, because of parties that are being complained to by the neighbors, but the unique experiences that can be done. Now, you look at some of these experiences, you're not going to be able to get a hotel listing this lighthouse. Neither are you going to be able to get a hotel listing this very unique, beautiful piece of home that is in Germany. So that's the unique new things that you can do with Airbnb, which is very different than what you might get in a hotel stay. Across Europe, lots of different opportunities, unique stays at Airbnb, lots of beautiful new locations, experiences such as balloon homes. All of that seems to be fairly good. Hosts mostly have been banding together in various different locations, complaining to their local government and their local authority, telling them to keep Airbnb to make sure that they can make money on Airbnb versus trying to shut them down. That seems to be the only advantage that Airbnb has shown. Overall, from a unit host count perspective, roughly about 5.5 million hosts, as I said, has been growing fairly consistently. More people are putting their homes together to be rented on Airbnb, and the guests have gone to 150 million. In terms of inflation, the price of the Airbnb home has gone up nearly about 20 to 30% over the last 3 years. It has gone in 2020, it's gone up nearly 50%. That's the incredible amount that some of these prices have gone up to. Inflation rate has been 11%. The host growth has been so more inflation led to more hosts coming on overall. By country, USA still remains the number one in terms of total number of booked homes. Roughly about 15 to 17 million homes have been booked, or rooms, if you will, experience rooms have been booked by USA just in the last year, and tapers down to Canada overall. Trailing 12 months, if you look at the booked homes, 413 million homes. So it's growing very, very well. From the low of COVID, it's done a near double. So that's a good sign. The prices have remained fairly steady as well. So this is a good sign overall. And then if you look at the host population by size, usually someone that has managed one property is going down. So it becomes more of a where people have 6 to 20 different properties and they're managing a much better job overall. So this is someone who's managing a property for 6 to 7 people. So let's say you have a home, you don't want to manage the Airbnb listing, you give it over to somebody else, they manage it. They're doing it for about 6 to 20 different homes, very similar to a rental property, if you will. That seems to be the going case right now for a lot of people. And then single host seems to be dropping overall. So that's Airbnb just as a background. Now let's take a look at the fundamentals and technicals, see where we like, what we don't like about Airbnb. Okay, we always start with the long-term perspective from a financial standpoint on an annualized basis. So that's the income statement. And on an annualized basis, they've done a good job. 2.656 billion, so 2.5 billion, roughly almost to 4 times. That's a phenomenal growth, 4 times, even though they took a dip. So this was a dip from 4 billion, almost 5 billion. So they doubled here and then took a dip and then came right back up. So it's nearly 10 billion right now, trailing 12 months. That's nearly 4 times the growth, more than 4 times actually the growth. That's a good thing. They have nearly about, oh wow, look at their margin. That is a solid margin, 60, 70% gross margins. That's very, very good. Very good net margin as well. Net income is nearly in the 30 to 50%. Oh my goodness, this is a very profitable balance sheet. Sorry, very profitable company overall. 2 billion in the last quarter, growing. So growth has dramatically slowed. If you look at it from an annualized basis, as we said, it's grown to about 17%. It used to grow about 70%, now down to about 17%, 17, 18%. It's what it's growing at. Very profitable, nearly about 50 to 60% profitability on the gross side, and roughly about 10% on the net side. Balance sheet should be good. They're a low asset light company, 16 billion in current assets, total debt about 2.3 billion, very manageable. Cash flow is positive as well. Valuation, about 9 times. For someone growing at 55% gross margin, 12% net margins, growing at about 18% revenue, and profitability seems to be growing. Let's see, profitability is growing about 100%. So that's good profitability. The PE ratio being high shouldn't be that much of an issue. This is 19. This is not bad at all. Price to sales, given it's a 55% net margin, gross margin side, is okay. You would like to be seeing this in the 8 range. 9 is not bad at all, though. This is a very good valuation for a company that's been growing at about 18, 20%. That's very good valuation. It's about $100 billion market cap for a company doing about 10 billion in sales. Okay, so let me do all these previous drawings. Let's go to the monthly chart. On the monthly chart, yeah, so this is an interesting chart. It's very hard to decipher. You would imagine that best case scenario, this has been there you go, this is a cup. It's been forming a strong base, and this is the handle. So it should be able to make its move back up. It's built a very good base overall. On the long-term chart, it's just building a strong base. So it's moved down all the way to 80, so it's nearly doubled from there. on a 6-month basis. So yeah, it has done a very good job of being able to build itself a very strong base. This is the strong base. You could literally call this the base that it has built. It's gone up a little bit, but this is the base that it has built over the years. And realistically, the base is somewhere over here. So it's built a good base, done a couple of rounds moving up. But right now, it seems to be on a stage for decline, even though it's built the base. So this is the cup, this is the handle. On the weekly chart, it should form itself somewhere of a reversal in this range, somewhere over here. So it seems to have formed a reversal now, seem to be heading 140 seems to be the reversal. Wants to head higher. It did a big drop after the previous earnings. Look at that. That was a huge drop. This was not expected in my sense. But yeah, so this reversal should get it back up in this range. For the long term, this seems like if it's growing at about an 18-20% range, and the market share of 10% for short-term rentals has been the same. It's not gaining share much in the short-term rental side. Neither are they losing share to their competitors. They'll continue to do well. Now, the question is when they double from here, can they get to a $200 billion market cap and become a mega cap? They could. I think they could in a 2 to 5 year, maybe even longer than that, 5 to 10 year time frame. They can definitely double from here. They seem to be growing at the right pace. They did a very good job of moving all the way up here. Look at this very strong stage 4 move. This is a consolidation phase, and then they seem to be declined with a little bit of an expectation of a reversal. So this looks like it wants to reverse. The 200-day moving average is where it is at. This is a very good spot to get in if you want to get in the long term. RSI is moving in the right direction. MACD is moving in the right direction. This is a very good stock for the long term. For the long term basis, 2 to 3 year horizon, this is a good place to get in at the 200-day moving average on the 140 range. It might move a little bit lower, I think, but valuation wise, it's not that high for it to move very, very low. So this is a good place to get in. Now look at the forecast. Most people seem to be neutral on the stock. Okay, so it's got a, yeah, neutral probably because of this. It's got a 30% move up, 40% move down expectation. If you look at the revenue expectation on an annualized basis, it's about nearly 17% and almost $10 billion to 11 billion, so 1 billion, 16%, if you will. 16% growth on the revenue side is expected. And then on the profit side, oh, wow, they're expecting a lower profit. Is that correct? That seems to be interestingly low. So this was maybe an exception to profit, but why would this go down? That doesn't make any sense. Okay, I need to check that a little bit. From 7.3 EPS, it's going down to 4.2. Is it because the number of shares are going up that the EPS is going down? But this is right now right at the right spot. It's right at the middle. They're expecting actually the bigger expectation for it is to go 45% lower versus 36% higher. So there's not much of an upside. A lot of analysts are expecting. This is strange. Most analysts are saying, no, don't buy it right now. Most analysts are giving it a hold rating. Quite a few of them are giving it a sell rating. They're expecting it to get down to 80. I wonder if that is primarily because of the fact that most of these guys are expected, more locations are expected to say no to it. Few places where they're upgrading. So it should go up, but this has got still a little bit more downside is what the analysts are saying. So expect to watch a little bit more. In any event, I think this location it's a decent buy even at this location, but 130 might be even more better when it comes to the 8 from a price to sales perspective. Let me know what you think. I'd love to know your perspective on Airbnb. I think it's a good long-term buy, but again, it seems to be at the right place. Could be a little bit more downside. It hasn't taken that much more downside. So anytime it gets to the 130 range, I would just be a long-term buyer.